Hey, Dan Fitzpatrick here, stockmarketmentor.com. Let's look at Tesla. Now, I started covering this stock last week in the chart of the day, and I mentioned it over the weekend that this was actually my biggest position, not because I kept buying it all the way up, though I was a little bit aggressive in that, but it was really just because of price appreciation. I mean, the stock just kept going up. And you might have looked at this here. It wouldn't have been a bad look. You might have looked at this here as a potential blow off here where the stock went up so much and then it closed below where it opened on Friday that was the end of the road. But to be honest with you, I haven't seen any blow offs that start with this type of a pattern. I mean, this is kind of a hammer pattern where you get the close that is below the open, so the stock opens up here, it closes there, and then, other than that open and close, you're getting a move down here intraday. And so what this really signifies is, okay, the stock opens up here and then runs down, which is not a good thing. And then it runs back up well off of the low. It doesn't eclipse the open, but it does close near the high of the range. So, that's what we saw here. Plus, it's Tesla. And so there's always a lot of scrambling for that. And so, you stay long. And then today the stock opens up again higher and continues to go. Now, I had actually closed out my entire position today a couple different times because then I saw the stock keep going higher. We can look at this on a VWAP pivot point deal. I mean, this was the pivot point, the top pivot point, 1271. All right, well, this thing got above that at the open and then stayed above the third level of resistance and never really looked back. So there were a couple times when I'm thinking, all right, that's it for that. So I kept raising stops. Early on, I kept raising stops, staggering them out, and never really got stopped out. And then I got stopped out of one. And then right around, the noon hour, somewhere in here, I said, I've been guilty in the past of trying to time tops, of trying to absolutely pick the top, but I need to not do that because frankly, if the stock whipsaws and I wind up losing a lot of my profits, even though I know I'll still make money, I'll feel like an idiot. And that stuff's really important. Your mental psyche is a huge part of trading. And so you can have a really profitable trade. But if you know that you traded it wrong, you're going to wind up feeling like a dope. So I got out of it. But I set a couple alerts. One of them went here. And somebody in the forum, on my apologies, I forget who it was, mentioned this breakout here from an intraday volatility squeeze just shortly after I bought the stock. I think it was like here or something like that. And so then the stock's up. And then once again, I sold my last part at 1372, very close to the close. And I felt really, really good about that. Well, now the stock just continues to go higher after market. So this is what I've done. I'll admit it. I took another position in this stock after hours. Small enough, though, to where, frankly, the stock could go to zero and my trades on this stock would still be okay because I've made that much money. And so in hindsight, what I would do is rather than close the entire position, I would just say, you know what? This is really good. I'm going to close 90% of it, or I would close more than 50, but I'm just going to close a fraction of my position and just hang on to the rest of the stock. Because in a way, me selling all of my position, again, not at one time, but over time, a series of staggered sells. my selling the entire position was actually me kind of calling a top and being wrong, because then I'd get back in. I'm doing it with good risk management with respect to position sizes, entries, where my stops are, stuff like that. But generally speaking, doesn't it seem like a better way to be trading this trend? Especially, I mean, one that's just absolutely, you almost expect this stock to go back in time. I mean, it's freakish how this stock is run. So, in hindsight, that's the way I would have been trading it, is just decide how many shares I'm going to hang on to that are just in the vault, not going to get rid of them until maybe it hits 1,500. I had suggested earlier this morning, like the stock might hit 1,400 this week, and I was correct. But this week turned out to be about 4 hours. So anyway, I would stay long Tesla until this stock forms a red candle. Once the stock closes below the prior close, that's probably a good indication that this run is over. But until that time, I think there's a real frantic competition to buy this stock by different factions. And I go into more detail on that in today's strategy session. So anyway, hope you guys are doing well. Hope you had a good 4th and a great 6th. And let's see if we can make the 7th even better.